whilst people talk about overvaluation of the markets, of course, there is data in the opposite direction. You could look at this, the percentage of US stocks which are trading over 10 times their price to sales ratio. In other words, their share price relative to the sales, the revenues they're getting per share. And at the moment, we're not at 2000 peaks. Now, that doesn't mean that share prices can continue going higher any more than it could mean that it's going to go the other way. But it does put some things in context, that it's not a one-way bet that markets are going to fall tomorrow morning or indeed in the next week or so. Whilst it shows certainly some degree of overvaluation, nobody would disagree with that, but I wouldn't use this to panic either way. What I'd say is that for our investments over 12 months, we want to make sure we've got resilient stocks protected against market falls based on our investing criteria of valuation, growth, income, momentum, and consistency of performance. And on our trading, well, on trading, of course, it doesn't matter because we're looking at momentum up or down, whichever way the market gives it to us. But I just wanted to share this with you to say, as ever with the stock market, there's evidence in both directions, and that evidence never helps you in terms of imminent timing.